What is up, YouTube? What is up, Canada? Matt McKeever here, and I'm joined with
Griffin. Hey, how's it going, everyone? It's Griffin Milks. This is our second episode here of the Canadian Millennial Money. We got lots of interesting topics. We also, last week, I told you to follow on Instagram so that you could answer some questions, and we have lots of submissions. So, yeah, looking forward to getting into it.
Yeah, I'm excited to jump into some of the questions and answers or questions and give some answers. But I guess before we get into that, what's new with you, Griffin, this week? Any changes, any big adjustments to your investing portfolio?
This week, actually, I refinanced a property, so I'm getting ready also to buy another one. So some good news on the real estate side. Stocks, I've kind of been just watching the market right now, to be honest. And then crypto, we're going to be talking about that today a bit as well, because that's mostly what the audience asked. But with ETH is the only crypto that I actually hold. So, the values have gone up substantially this week. Pretty exciting. And we'll get into that. How about you, Matt, investing wise this week?
Yeah, trying to think if we did much. I don't think we've done anything on the apartment side of the business. So nothing like really cool or exciting there. Honestly, I've just been stacking more ETH, getting ready for Gary V's NFT drop tomorrow. And then actually on I forget, what I was talking to you yesterday about the other thing, but anyways, there was a new NFT that dropped yesterday called Meebits, and it turns out if you owned a CryptoPunk, you could get one of those for free. So I was able to kind of get a free NFT, and I'll maybe explain that once we get into some questions about NFTs, but essentially pretty sure we could turn around and sell it for like 2 ETH now, and it was free. So
within one day.
Yeah, and like I've got a screen share I'm going to share with you whenever we get into it, where this other dude got one for free, and you're not going to believe the bid he got on it last night and that he turned down. Like he didn't accept the bid. It's just like I barely understand the world and universe or timeline we currently exist in. It's such a wild ride.
It's getting weird. We can put it that way. It's getting pretty unpredictable for sure. But you know what? Let's actually talk about that quickly. So last week, for anyone who missed the episode, we spent a good considerable amount of time speaking about NFTs, CryptoPunk specifically, and Matt went through and we were looking at it, explaining. So Matt, tell me what you were talking about offline there, how it's gone up significantly.
Yes. So I actually forget what the exact price was when we were last chatting, but I'm pretty confident.
Like 40 or 50, I think.
Yeah, I want to say it was maybe 50, maybe it was even 55. It actually has softened a little bit here, the market, but still we're looking at 64,000 USD is the cheapest one currently for sale. And earlier this week, there was multiple times where it was above 70,000. And like, again, this blows my mind. It's a weird moment in time, I think, as far as NFT culture. But if somehow like these punks stay here for an extended period of time and we continue to see more and more transactions occur at this like price point, I think we'll start to see a floor, like a stronger floor potentially develop here. But the one thing that's kind of interesting to me, where I feel a desire to kind of want to buy the rumor, sell the news, or maybe even sell the rumor at this point in time, but they're going to May 13th have an auction at Christie's where 9 of these are going to be auctioned off, and it's assumed it's going to be a 7-figure auction. So it'll be interesting to see how all that plays out. But it turns out yesterday, the same guys that did CryptoPunks, Larva Labs here, they dropped a whole new thing called Meebits. And these Meebits essentially are like 3D versions in a way of CryptoPunks. That's not an exact perfect analogy, but it turns out if you owned a CryptoPunk at that point in time, you could essentially prove that you had a CryptoPunk and they'd give you a free Meebit. And so this is the Meebit I actually got for free. It's just randomly assigned to you, but it felt kind of fitting that he's in a tie. And
so how many are there? Is this like the ETH to Bitcoin and NFT version?
So like, I think if I remember correctly, there's 20,000 of these. 10,000 were given away for free and 10,000 were sold. And I believe most of them sold for around 2.5 ETH. If I'm not mistaken, when they were originally dropped yesterday. And it sold out in the first day, which is usually seen as a bullish sign in this game. But anyways, goofing around on Twitter, I saw one dude posting like, look what I pulled. And I was like, wonder what he pulled. And so it turns out he pulled this thing. And so he owns 3 CryptoPunks. And so he was able to get 3 of these for free. And I was like,
that one's gnarly.
This one's rare, right? I knew it was going to be valuable. right now we can see there's a bid for 340,000 USD for it. And this is something he got for free yesterday. But it gets crazier. Wait, there's more. Someone bid, holy shit, Pranksy. I didn't even see this earlier. Pranksy,
is this like totally official though, Matt, in the sense that like the
like
bid
someone
is
could
in,
accept it.
Yeah, but if it's accepted, is it like a binding offer essentially, or how does that work?
For the moment in time until you cancel the offer. So it's at your discretion. Like you can set a timeline for it. So you can say this is good for like, you know, it looks like they just updated the way it's presented on OpenSea. But anyways, last night there was an offer for 200 ETH on it, and they didn't accept it. And like my mind was blown. And now I'm not sure if I'm reading this right, but it looks like there's an offer for 300 ETH on it now from Pranksy, which again is crazy if that's true, because
plot twist, you're Pranksy, eh?
Yeah, I would love it. Jesus, this, man. I worked for a decade in real estate
to make that money,
right? Like, and then years and years working at the CPA firm and stuff. Again, not really hating on anyone. These people are seeing trends and opportunities before I'm capable of seeing them, but it is a little difficult for me to comprehend how someone can pull something for free and then have a thing that's worth almost $1 million USD potentially the next day.
I agree. To be honest, I am still trying to wrap my head around this, but it's pretty crazy, honestly. And you know, having like Gary V dropping some tomorrow, and it's just it's a new realm of investments. So let's talk about some of the, like, are you cool with that? If we go into some of the other questions. So a lot of viewers were asking about cryptocurrencies specifically. So I'm going through them here, specifically Ethereum and where we think Ethereum is going to run to during this cycle. So if you've been following crypto for a while, it really does seem to follow this cycle of, you know, it'll run up substantially, crazy amount of media attention, and then usually it'll recede down quite aggressively as well. It's kind of like what the nature has been for this market. But having just reached 4,000, well, let's just say 3,000 USD this week, though, that's pretty crazy, honestly. I did not think moving into this year we'd be seeing these types of prices, and I'm trying to even understand why this is happening. You know, is there even understanding to be had? Matt, you are in this all the time. What's your take on it? Yeah,
I think from my perspective with Bitcoin and stuff, we've got certain like charts and theories like stock to flow that can make it a little bit easier to at least try and make sense after the fact of what's going on. I'm not going to say that you can even really proactively always understand, but with Ethereum, it's really not the same case. So yeah, I definitely, again, I don't want to claim to be an expert here. I had no inclination that it was going to go in this direction. I definitely, all the Ethereum I own because it was to play with NFTs. And so I don't know if that's an aspect here.
So were you recently acquiring them, or you've been holding for a while
so like
now?
I've only acquired Ethereum this year. Well, I owned like 0.07 of an ETH for like ever. But other than that, I've essentially just been acquiring this year. Thankfully, my dollar cost average is lower than 3,300. But I know one other thing that we were chatting about here was, you know, what's going on, the ETH to Bitcoin, right? And so, again, I'm not saying that we know at all what's going on, but it's interesting to see compared to recent history. You know, you would think looking at this chart, oh, this feels very high. But again, as we continue to expand out on a 1-year time horizon, still feels pretty high. On a 5-year time horizon, this is where you'll see a lot of ETH bulls kind of argue that there's still a lot more potential, because it would appear on the surface that, you know, the peak of ETH in the past was almost at 0.15, right? And if we were to, I think the common thing you'll hear them discuss is like, hey, if we were to go with 0.15 on, 0.15. So if we were to go,
for anyone who might be confused, just quickly here, for anyone who doesn't understand, this is a chart of Ethereum's price relative to Bitcoin's price. So as each one move, what's the relative? Just, I wanted to put that out there.
Yeah, appreciate that. And so essentially, if we were to assume Bitcoin's $55,000, which, you know, any given point in time, USD, it's bouncing around in that range. So right now it's like 54,000. But if we were to allocate it at 55,000 and take that 0.15, it would look like 8,000 USD would be the price. I know a lot of people are throwing around like 7,000, 10,000 before the end of the year. I think it's really difficult to predict with any accuracy here. I think that the one thing for individuals that want to try and make sense or understand more of this is like, start thinking about like, why do people acquire ETH? Is there any sort of patterns I can see here, right? And so obviously, I think that there is a lot of money flowing into altcoins. And for a lot of people, ETH is kind of the on-ramp to those altcoins. So
it also seems to be the main currency that NFTs are being transacted with, right?
Yeah, absolutely.
So,
at this point in time, by far. Over time, I think you'll see other platforms, whether it's a Cardano, whether it's Binance, and like Binance already has some. But it'll be really interesting just to see again with time. I think the only way I'm going to ever make sense of this is with hindsight. Straight up. That's my perspective.
Yeah, and I mean, actually flowing into another question, someone said, the fact that if you bought, it's not really a question, but the fact that if you bought Doge with the first stimulus check last year being $1,500, it'd be worth $350K. And offline before this, Matt and I were kind of, laughing about that because of course, it's like anything. Hindsight's 2020. The amount of volatility we're seeing with crypto, I find it's so hard to use it as an actual investment where you're storing wealth. I know Bitcoin is kind of the store of value, the gold standard essentially with crypto. And I do think that more and more as we're moving forward, it's becoming more seen as an actual viable investment vehicle. But still, the amount of volatility is pretty nuts.
Just kind of building upon that. And I see there's a chat I might get to in a sec. Appreciate the super chat there, Blockchain Mac. But where'd my mouse go? Okay, here's my mouse. One of the websites I love checking out here is Bitcoin Treasuries. And so this to me is one of the things that really separates Bitcoin right now versus other cryptocurrency projects, right? And that's the fact that we can see some real institutional investment, right? So this list right here is just publicly traded entities that currently hold Bitcoin. We can see at the top is MicroStrategy, then Tesla, then Square, and so on and so forth. Yeah, absolutely. And again, you can see what the total value is. We can also see the percentage, right, that Bitcoin makes up of the overall market cap of the entity. So again, MicroStrategy obviously very into Bitcoin, where Tesla, it really is just a treasury policy, it appears, right? And then again, what we can go down is to private entities. So if there's private entities that have announced that they have holdings, again, we can see roughly what they hold. And what's great is it also shows us a percentage of what they hold versus the entire supply, right? So we can see MicroStrategy almost as 0.5% in essence of the Bitcoin supply. As we continue down, we can also then see ETF-like products, right? And see that, Grayscale, a company that a lot of people will have heard before, or GBT, they've got 3.12% of the supply of Bitcoin. And again, I just find all this so interesting and fascinating because again, right now, we don't have a similar thing with Ethereum, right? We don't have the same sort of widespread adoption by large corporations. Again, I'm not saying that this is the only reason or the reason to get into Bitcoin over other coins, but this is definitely one of the things I look at and I find really interesting and worth, digging deeper into.
There's a couple of things on this jumping out at me. First one being, if you go down a tiny bit there, Ukraine government holding 2.5 billion worth. I'm looking forward to seeing Justin holding some Bitcoin.
Well, it's been released that a lot of the politicians in Ukraine act like, so it turns out that I've heard rumors that between the different individual politicians that there's more than one Bitcoin billionaire that's a Ukraine politician. So to see the government also getting into it, right, doesn't seem as shocking to me on the surface. But definitely interesting moment in time. And even like there's other little things that jump out to me. I wasn't the first one to notice this, but BlackRock here, they bought 6.15 Bitcoin. And so that's actually a meme in the Bitcoin world. And so it's hard to imagine that they accidentally bought the exact amount to play off of a Bitcoin meme. And so the meme is this like mega chat or whatever bragging about how he's got 6.15 Bitcoin. And so it almost feels playful to see them acquire that exact amount, in my opinion. So there's interesting things to be learned in some of this deeper research for sure.
So we're talking a lot about crypto, though. I kind of want to circle back to a fundamental idea of maybe portfolio construction, or at least the place that crypto should have in the average investor's portfolio, because I think that's something really important to bring up. In that it's really easy right now to be trying to run with crypto and invest at these high price points and out of literally fear of missing out. I definitely have one of my opinion on an allocation that should be adequate for a retail investor starting out. First, though, I'm interested in your take, Matt, on this and what you would recommend anyone who is starting out literally with a net worth that is relatively smaller. You're not playing with large numbers.
Yeah, my general perspective here is that unless you've done a ton of research before you're getting into the crypto space, anything above a 1% allocation is likely extremely risky, and you're likely not going to have the confidence and the stamina behind the conviction behind whatever you're investing in to ride ups and downs and the volatility that you're likely to see. On the flip side, if you essentially have nothing, I would say whatever, throw $100 or $500 into it. If that happens to represent more than 1% of your net worth, again, I don't think that that's a wild risk per se, but what I really view $100, $500 or 1% of your portfolio in Bitcoin as is that to me is tuition. And so once I start putting my real money into an asset class, I start doing a different level of due diligence on it. I'd like to pretend that all my due diligence always occurs before I get into an investment. But I think a lot of us start looking for reasons to rationalize or justify our decision after the fact. And so we start even doing deeper research at that point in time. And so I think for a lot of people, playing with fake money or a fake portfolio with cryptocurrencies isn't going to give you the right incentive or the right perspective on how this all plays out, in my opinion. So
I completely agree with
1% would be my answer. But yeah, where's your mind at, Griffin?
Yeah, I'm actually surprised you said 1%. I thought you were going to say more in the 5% range, if I'm being honest.
Once you start to get comfortable with it, I definitely see it. And I'm happy to share my long-term perspective on my portfolio. But yeah, keep going.
Yeah, let's do that after. I was going to say around 1%. Now, there's a difference between having held some Bitcoin or Ethereum and now having that percentage grow. But for your initial capital out of pocket, putting it right into a digital asset, I would tend to recommend a much lower amount, because there's also, it's one of those things where I feel there's so much more volatility. I know I've said this a lot in this episode, but that you're better off becoming a more rational investor with different asset classes and becoming comfortable with that level of volatility, which if you're completely new to investing, seeing your portfolio go up and down 20% can be one of the most disastrous things and difficult things to cope with. Even after years of investing in the stock market, and I'm sure Matt can attest to this as well, it's not fun seeing your portfolio, some positions go down 20, 30%. And that's something that's a lot more commonplace in crypto. And interestingly, so we touched upon this last episode, but so at the peak there, at the end of 2017, when ETH first shot up like crazy, I set up this mining rig. And since then, I mined about, I think 7 ETH now at some point. And when it initially...
Do you still have it?
Yeah. It still runs. It's at my parents' house. Some people were roasting me in a video I made recently, but it's still in my parents' house running 24/7. But it's one of those things where when it initially went past 2,000 or so, a couple months back, I sold some off because I was just I'm going to recoup my investment, and I'm definitely happy I did that. But it's one of those things where, back to what we were saying way earlier, hindsight's 2020. Should have kept it, but at the same time, who knows, right? It's hard to even say where this is going. So,
yeah. And again, even taking a further step back here for perspective, I know that a lot of people that are sitting on big gains right now, again, awesome for you guys. But I think the one aspect that needs to be understood as well is that the COVID-19 variable, right? And obviously, we can't know what would happen in alternative timelines with any sort of accuracy, but to me, it is a fascinating mental game of would we be here if the printing press wasn't going burr for the last year at the extreme level it has, if we weren't seeing a lot of people forced online? Even just think about the average person now probably spends so much more time online, and their ability to be exposed to social media or other things that are going to, again, push them in that direction. So like, I don't believe that there's anyone that intended this to all occur, but there's a lot of interesting unintended consequences, I believe.
Yeah, COVID was such an important factor in certain industries like e-commerce. Holy cow. I was looking through, I released a video last week on my channel going through Amazon, kind of change the subject here, but Amazon, Facebook, and Shopify's earnings this past quarter. It is mind-blowing how much these companies are growing and how it's literally going to be impossible to catch up to these companies. Like if they were already dominating their spaces, now it's just this race. It's not even a race anymore. They're so far ahead. Amazon posted revenues 110% higher than same quarter last year. Think of how crazy that is, because everyone's buying stuff online. And same sort of thing with crypto. You know? Literally,
like half my money these days goes to Bezos. Like I don't spend a lot of money, so like don't have people assume that it's a shit ton that I'm spending there. But like, it literally is like, especially when you tell me I got to put a mask on to get something, my path of least resistance, I just naturally go, how can I make this easier on myself? And it turns out like, although even I'm mildly, it's interesting. I've noticed that Amazon's not as prompt with their deliveries as they once were with Amazon Prime, right?
It's taken a couple.
We're starting to see a little bit more days added on, like, because I think the supply chain is being stressed as well. And so I know blockchain.
Think of the volume, you know, it's just nuts. Yeah.
And so again, long term, I see so much more upside for those large mega corporations that just inherently benefit from that sort of ecosystem. But I just want to circle back real quick to blockchain Max comment here and appreciate the super chat. So more bigger institutions are now getting into crypto, which is a factor as to why crypto has been up. Most cryptos run on the ETH network. Absolutely agree. I think that that's a big aspect of a lot of the funds that we see flowing in there. But I guess, so I just want to circle back to your other point about thinking I would be more aggressive with allocations. Because I do want to spell this out. I think that for me, I think it's Bitcoin, I'm talking about in particular here, is a sound investment that I overall believe in. But I also see it as like a vote against the status quo or the central banking system. And essentially, I don't feel like individuals ever really had a choice up until this moment in time. And like maybe this moment in time was back in 2012 and I should have been smarter. But irregardless, I don't think that for an extended period of time, except for recent memory, we've had this opportunity to become truly a financially independent individual. Like you can truly become your own bank. And I know that blockchain Mac here was sharing some of the different wallets and stuff. Really encourage you guys. Ledger seems really easy. We're right. I just got my first Trezor. We've also used Cold Card. There's a lot of great options out there. But I think for those individuals that are maybe very libertarian, maybe very anti-government, maybe you've already built up a decent nest egg. Maybe you've got some substantial wealth. I think that as you become educated, the idea of going 5, 10, maybe even 50% into crypto, Bitcoin in particular, in my opinion, or crypto, if that's your preference, can make sense. Now, the one thing I really want to just do black and white, and then we'll drop the crypto thing completely, is the difference between Bitcoin and other currencies. And so to me, Bitcoin is unique because of the way it was released and developed, whereas everything else had a for-profit motive behind it. And so I think because of that nature, I've got a much more long-term comfort around Bitcoin. But anyways, let's talk about your refinance. So what was the deal or the details on that deal?
Sure. So this is actually a fourplex that I got around 6-7 months ago now. Actually, it feels like so much longer, man. Time's gone by crazy fast. That's another thing, actually. The pandemic has just made everything go so much quicker, I find. But anyways, so it was a fourplex. I purchased that one for $340,000. It was grossly mismanaged, and that's one of those opportunities that I speak about in some videos, and I'm sure you have as well, where it's like if you can find a property that is grossly mismanaged, and by that I mean the previous owner had not raised the rents for about a decade. And I'm not saying I'm coming in and completely disrupting everyone, but yeah, I was able to raise the rents organically through people leaving on their own will. And then the market I have been somewhat lucky as well in this market. It's gone up like crazy over the past couple of months, but yeah, so just refinanced it for 460,000. So pretty good spread there in like less than a year. And I'm just going to be taking that and reinvesting it right back into another property and doing the exact same thing. So I have.
And so has your buying criteria evolved, or are you using the exact same metrics that you would have used to buy the last one?
Yeah, the actual metrics themselves, it has changed in this market. Like last year, I was able to buy a property here for like 10x annual revenues, kind of unheard of now, to be honest. But even there, the banker we're dealing with at Desjardins, he literally is like giving us a refi quote right out the gate before we even, obviously it's not a concrete one, but even before we're acquiring it, and telling them what we're going to be doing to the property. So it's one of those things where we can kind of really, we have more info and data on our side to make a good informed decision. And to answer your question, right now, I'm kind of really comfortable in this niche of smaller properties and like just buying them, renovating them a bit, raising the rents, and refinancing them. As I gain more experience, I will venture on into different projects, but that's what I'm doing for now.
Gotcha. And one follow-up question on this next project.
Sure.
Are you swinging the hammer?
No, not at all. So this next project, it's way bigger though. It's literally, you know what? Let's run through it for a couple minutes. It's a triplex right now. But it is zoned to be 4 units as well. So top floor has 2 1-bedrooms, middle floor is a whole unit with the basement, and it was just meant to be. Honestly, I went and did a walkthrough of the place. Really high ceilings already, full outdoor door already going down into the basement. It was perfect. Like we're literally just going to cap off the stairs. And the tenants didn't even know this when we bought the property. The tenants that are in that main unit are leaving. Actually, they left 3 days ago, on the first of the month. So it was just like, it was
awesome.
Amazing. And so, no, I'm estimating it's probably going to cost them around 30 grand based on what it looks like right now to redo the whole basement unit. But then when it's all said and done, refinance probably for around 480 is what I'm thinking. And I paid 380 for it. So.
And then what do you think fair market rents for that building would be post renos?
Yeah. So it's going to be 2-bedroom in the basement, 2-bedroom middle, and then up top, they're 1-bedrooms. Up top, severely under rented. They're rented for $450 a piece right now, 1-bedrooms. That's okay though. They've been there for a while. Middle units, middle and bottom unit though, any day of the week, $1,200 easily, which in your market might sound like an absolute steal. I know some people are probably watching and they're paying like $3-4 grand in the GTA area, but any day of the week, $1,200. It'll cash flow probably off the top of my head, probably around $1 grand, and really good equity on the buy.
That's awesome.
Speaking of real estate, I have another question that someone asked.
Let's do it.
And she said, I work remotely. Should I move to a small town / a city where prices are undervalued relative to Toronto, Vancouver? I'll let you answer that first, and then I'll.
Sure. I'm huge on finding low cost of living areas where you can still get the same quality of life. And I think a lot of people have biases. Again, now this is maybe based upon me growing up on a farm in the middle of nowhere where, the big city to us was like London, Ontario, and it was a 45, 50-minute drive, right? And the big town to us was Exeter, Ontario. And when I originally was growing up, like we didn't have a Tim Hortons or anything like.
How small is this?
Probably it was 3,000 people back in the day. So now it's maybe 5,000. But again, that was like a 15-minute drive from where I lived. So again, like it didn't have a Tim Hortons or McDonald's originally. So I'm biased.
Tim Hortons. That's not even a Canadian city, man.
I know. I'm also old, so you got to factor that in. That 25 years ago, Tim Hortons wasn't quite as prevalent. But Yeah, I think that it's so much easier for people to get the same quality of life in a low cost of living area. And you don't have to make major sacrifices. I see so many biases from my audience members who are born and raised in Toronto and never literally stepped outside except for maybe one weekend of debauchery at a beach or a cottage. You know, I actually don't know what you all love about Toronto so much, like the idea of traffic and things like that. I think that what people need to do is really figure out what's actually important to your quality of life. And I don't think, endless bar scene is actually that important to your quality of life for the average individual. So I would really push you, if you're currently thinking of that and you're struggling to think that your life quality will be the same in a smaller community, I would really challenge you to figure out what exactly you think you're sacrificing. Because, for example, here in London, Ontario, which again, depending on your definition, is either a big city or a small city. But I see every sort of amenity that you could get in Toronto. We were the first city in North America to have a 24-hour fast food vegan restaurant, right? Or drive-through. And so like all those random things, like you can find these pockets or communities. So like, again, I think there's just a lot of bias and everything else can be done virtually. So again, if you can do your work virtually, you can make a Toronto salary while living in a lower cost of living area. To me, it's absolutely a no-brainer. But what are your thoughts?
I completely agree. And this is one of those things where also, once again, pandemic was definitely very detrimental for many individuals who, lost their jobs or whatnot. But for this individual particularly, saying they have the opportunity they do work remotely, this is just a golden opportunity, right? I grew up in the suburbs though. So for me, this is what I grew up with knowing. I did try out the big city thing though. I moved to Montreal temporarily. Personally, I hated it. And now I moved back and I'm back investing here. And thinking about it now, there's no way had I stayed in Montreal would I have ever been able to afford to start real estate investing. I don't even know where I'd be right now had I not moved back, to be honest, just because the cost of living was so much more. And it's little things here and there as well that you just don't realize cut into your monthly budget, right? Like when you're starting your financial journey, saving that extra $50-100 a month makes a difference. Like it does. As you compound and grow larger, $100 here and there isn't nearly as much of a big deal. But when you're saving for your first down payment, it makes a big deal. So when you're going to the grocery store and everything is, even 5-10% more expensive, you don't realize it on the spot. But at the end of the year, it makes a really big difference. So I would say, if you're fortunate enough to work from home, go for it, move and try it out. You probably won't regret it. Even if you don't like it, come invest somewhere else and then build up a portfolio, move back. There's options available, but I would say try it out for sure.
Yeah. And again, I think it's a lot easier than a lot of people make it out to be. So I love the idea of buying in a lower cost of living environment and then buy not just a single family house, but buy some sort of property that's going to allow you to house hack, right? And what's great is if you buy it as a primary financial decision first, you can feel out the city, feel out the neighborhood, feel out the community. You don't like it, you can move to a different property, acquire a different property, and then rent out your existing unit. And you've still got something that makes fundamental sense. So obviously don't just like throw a dart and buy a random rental property in a city. You do want to do due diligence. And what I really encourage anyone that's scared of losing quality of life by moving to these smaller centers, again, make a list of exactly what you think you're actually going to lose out and then check your assumptions, right? Verify, like, can I actually get that in the city? So like London, we've got, 3 major hospitals. You can get pretty much anything done. You're not going to be sent to Toronto for just a random surgery. Again, it's important to understand these things because a lot of people I just see jumping to conclusions because they overheard one family member say something like, "Oh, you'd hate living in the country. You'd get bored in a minute."
I mean, if you listen to every single, doubtful comment that anyone said, I mean, if I'm being real, sometimes I just have to get off the internet even. I make a living off the internet, but sometimes it's just there's so many differing opinions. Sometimes you just got to try something and believe in the process. Obviously, you need to do due diligence on a property deal like this, but I couldn't agree more that house hacking, that should be the first step in anyone's real estate journey, to be honest. It's the easiest way to get in. you can offset cost of living while you're starting. And then, hey, you want to move out, you want to move in with someone else, rent it out. Oh, look at that, the property is cash flowing, or at the very least paying for itself. And now as you're building more equity, hey, there's more options available to you. You can refinance, or maybe you can sell it. It's paying for itself anyways. Like, there's just more options available to you.
Yeah, absolutely. And just going to share this comment from John, because he made a good point here. If you're going to move out of your primary and rent it, get an appraisal first before you rent it. So the logic here, or the reason that's important, and appreciate you bringing that up, John, is simply you want to be able to make sure if you've got some capital gains that have occurred between when you bought it and when you decide to convert it fully to rental uses, presumably some of that gain isn't going to be taxable, right? And so because of that, we can kind of lock in a portion of our principal residence, right, which is capital gains free currently. So again, definitely important. And whenever making like a decision like that, just sit down for a moment with your accountant guys, jump on one quick call, and they can quickly help you navigate or stick handle in the uncertainty.
Speaking about capital gains on primary residences, let's bring this up quickly. Two things. First of all, one of my buddies was telling me he saw that in Canada there was a tax proposal to eliminate that. Did you hear about that? Or potentially you'll have to pay capital gains on primary residences as well?
Okay. Yes. So there's been multiple proposals in the past. It wasn't in the federal budget, so it's not going to happen in the near future. And in fact, at the Liberal, I forget what it's called, but the Liberal caucus meeting or whatever that they do pre-budget, even their delegates voted down a capital gains tax on principal residence, which I think is important. Whatever government if we could just get rid of all policy, I'm cool with it, and a flat tax. But realistically, I don't think we live in that world. So all those things being said, I think that it's one of the few ways right now that the middle class can actually try and insulate or protect themselves from the rampant inflation occurring. And the moment you start to tax that, what you actually do when you tax the capital gains on principal residence, you reduce people's mobility, because to go buy a new property, they can't buy. If they've got an Apple and they want to go buy the exact same Apple, well, no, they can't, because if their original Apple went up, and it's going to go up because of inflation, which is a hidden tax, then when you go to sell it, you've got capital gains, which you're going to be taxed on, but that other property you want to go buy has also experienced the inflation. And all of a sudden now it's just a way to keep stealing from the middle class, or force them to live in the exact same property for generations, right, to avoid that capital tax or that capital gains tax. So yeah, I think it's really important. I think the thing that I'm paying attention to, especially now that Biden came out with his proposal, is whether the federal government will want to mess around with just general capital gains, right? And obviously that's got huge consequences for everything we deal with, whether it's real estate, stocks, or we're talking about cryptocurrency. Each one of those would be very seriously impacted if there was changes. And one of the videos I've got on my YouTube channel that I think a lot of, especially younger Canadians, don't realize is they think the capital gains were always 50% inclusion, but it's really not the case. We've been on a wild roller coaster as Canadians, and you can watch it in my one video, but it started off, I think pre-1970 something, it was nothing. And then it eventually found its way to 75%. Then we found our way to it was 33. Now we're at 50 again, right? It's bounced around, and will likely bounce around again in our lifetime. And there are serious consequences. So I don't think that people need to be panicked about these things, but you need to keep one eye on it. And the thing that I'm really nervous long-term about principal residence capital gains exemption is the fact that for the last few years, ever since the Liberals got into power, they've been tracking what people in theory gained from selling their principal residence. And the moment you start tracking that data is going to be used against us, guys. That's not for our benefit. It's going to be, hey, if you would just let us tax a tiny amount of your principal residence capital gains, we'd make all this in tax revenue, and we could give you all these fun toys. And people are going to be like, yeah, I like fun things. A small tax isn't a big deal. And the moment you open the door to that is really when it's going to keep creeping, in my opinion.
Yeah, it's tough. I mean, we're just taxed so heavily here. It's really, it's a lot harder even to get ahead than any American folks watching, where you can also, withdraw your interest on your principal residence and stuff. That's huge. Another thing I was going to bring up is the fact that you definitely saw this. Biden was proposing eliminating 1031 exchanges in the U.S. And some people that I follow were like complaining about that. And I was just like, man, I wish that existed here. Oh man, now you understand how it is living in Canada.
Mm-hmm. Yeah.
And Graham Stephan and stuff saying they're moving out of Cali for X%. And here I am in Quebec with 53% when you're a top bracket. Anyways, there's ways to reduce that, but it's mind blowing.
Yeah, but it's important to understand there does become a disincentive for making more additional dollars, right? If you tax people too much, and again, there's different studies showing at what level, but it seems like in general, once we get above 50%, it starts to get a little dicey. Once you get above like 75%, it seems like you really start to disincentivize individuals to work hard. And again, I think it's important to understand we live and exist in reality, right? Like it's never a vacuum, and a lot of these proposals are proposed as if they exist in a vacuum.
Yeah, literally.
I see Russell had a question here for you, Griffin. Did you invest in Gatineau or only Ottawa? If so, do you have any advice for investors in Quebec?
Yeah, I actually live in Quebec, Russell. Yeah, I don't own any property in Ottawa. Ottawa, Gatineau, they are neighboring cities, but I only invested in Quebec. And do you have any advice? In terms of advice, not really. It's kind of the same thing. Get a good real estate agent, get pre-approved for a mortgage, know what you're looking for, know if you want to buy a duplex, triplex, and just really
does your paperwork have to be in French?
No, it doesn't. No, not at all.
It doesn't? I thought there would be some language law that would force that.
You know what? Actually, let me think about this for a second. Maybe it does. I'm fully bilingual, so like sometimes I just don't even realize. But no, I think you can get like all my banking with TD I know for a fact is English. So I'm pretty sure you can choose. Yeah.
Interesting.
That's actually something that someone had asked me, I think in one of my videos as well or something, saying, do you need to speak French or is it a huge asset to speak French? Of course it's an asset. Do you need it? No, you don't need it. Most people in Gatineau, they understand English, even if they don't, even if they want to pretend like they don't, they do, honestly. So
gotcha. So as long as your offer is good enough, they'll understand your English.
Oh, well, I meant like tenants and stuff. I mean, buying a property, I mean, anyone, regardless of how you speak, is going to be, regardless of your language, I mean, is going to be incentivized if your offer is good enough, of course. And then what do you think of Sherbrooke? You know what, Sherbrooke, it's not really a market I know all too much about it. I do know, however, it is very much a student city. So it's quite cyclical in terms of having students coming in. And I have some family members and some friends who did study in Sherbrooke, and right now they've all basically come back. So there could be a good opportunity though in terms of buying properties and renting out like by room and stuff. I think that's something that could be interesting. But in terms of what fair market rents are and stuff, I don't really know. Matt, do you have any insight on that for Sherbrooke?
Yeah, I don't know it that well. It's like kind of a commuter city, right, for Montreal as well, or is it a standalone? Because I might not even be able to find it on map.
No, it's not commuter.
Okay,
not commuter,
so yeah, I obviously don't know enough about it.
There's like 3, but do you have info, any tips for more student-focused rentals? That could maybe be about
Sure, yeah, and I was going kind of segue there, so that's perfect. So as far as student rentals go, I think that right now, there's a decent amount of uncertainty, right? And so I don't actually know what the Quebec post-secondary landscape looks like. Are the teacher unions and stuff really leaning into online learning? Are they fighting it? What are the potential consequences of all that? I think that that's important to understand because I think certain university institutions are more likely to be impacted by what's going on versus others. And what I'd really say is, for me, when I'm looking at schools and the long-term longevity of student rentals, the programs that are taught there, how essential is it that you be face-to-face for that? So there's certain schools, certain trades that I think will always have that. So like, I think medicine will likely be something that it will take a long time before it goes purely virtual. I think even, not that it makes a lot of sense, but I think law will also probably be something that will fight going virtual for an extended period of time. And I think a lot of like hands-on trade schools will also just naturally need that because a lot of the learning is tactile in nature. So you need to be actually interacting with things. So again, like certain applied sciences or engineering, again, where we actually need to muck around with things or get access to certain types of lab equipment. I think that those programs in schools are probably better insulated from any sort of volatility that might come from wide adoption of online learning or anything like that. So I think when you're looking at the landscape of the student rental market, you might be acquiring in, you have to have an honest conversation with yourself about the student profile there. And then in addition, what we need to look at is alternatives, right? So is there an opportunity to pivot here? So again, maybe that school is actually a very high risk. It could actually fall apart. Maybe it's not. The fall apart's a bit extreme, but maybe like a lot of their programs, turns out you can learn underwater basket weaving online really easy. And so they no longer are going to the physical school to learn that. Well, is it in an urban environment where you can quickly have new demand for that unit, or is it out in the suburbs where like, hey, the only people that want to rent here are students aiming to party? And so again, really looking at that full landscape, I think is important to have the best perspective on what to proceed with and whether student rentals make sense for you. All that being said, that probably sounds super bearish on student rentals. I also think that there's a cultural norm here of going to post-secondary, that's when you become an adult. And so I think that we will also see a lot of young people wanting that rite of passage, right? And that individual experience of being separated from the nest without being fully separated from the familial unit you came from. So there's a lot to explore there, but I think there's still a lot of upside as well with student rentals. There's a reason that I started with student rentals, and a lot of investors do. They're usually some of the best cash flowing assets you can find in any market.
Yeah, I was trying to quickly find the vacancy rate and stuff in Sherbrooke, but the only data I could find was 2018. Those were definitely some good points, though, about the actual type of education that's being taught, right? So I do know Sherbrooke, they have a good medicine program at University of Sherbrooke. So that could be, it's more of a hands-on type of education. And so there'll probably be a flow of students moving there. But let's talk about education quickly and where education's going. So, my university degree was 100% in person, except the last semester, because I had some classes to catch up on and I did those online. Man, I am all for school at a distance. If I had to redo the whole thing, I would do it all online personally, especially what I studied, being business, literally. I just realized the amount of time I took commuting and, gas money to get there, and just it's so much more involved. Now, yes, you could argue you might lose out on that campus experience and stuff, but kind of depends on who you are as a person as well. After year one, I was just out of there as soon as possible. And I think for someone who's paying for their own education and having to move out and pay for everything, as well as housing costs and all that, it's something that might not even be worth it moving forward. Especially if there's good online options. I think that is something to consider. What are your thoughts, Matt?
Yeah, absolutely. I 100% agree in principle. I think in practice, it probably does depend upon the type of learner you are. I know for me, oh man, had I learned online, I literally would have just only studied for exams. Because again, so much of, I went business school as well, specializing for an accounting designation. And, I already saw such a lack of engagement from my fellow students most of the time in regards to the information or the potential to actually learn critical thinking. And I do fear that I would have also been one of these assholes that would have just literally probably got a full-time job or partied the entire time, skipped every class, tried to rewatch the replay at 3 times speed and just try and suss out how to game the system. And I think at the start, it's going to be a lot easier to game the system. And with time, I'm sure that the checks and balances will catch up. But that's probably my biggest concern. But you're 100% right. There are so many hidden costs and expenses that occur there. And, I've seen different numbers bandied about, but sometimes you'll see that literally it's double, right? Especially in low-cost education environments like Canada, where you might pay tuition and then your rent, your books, your food, your everything else essentially adds up to an equivalent amount of what you spent in tuition. Now, obviously in the US where your tuition's through the roof, but I think the bigger thing is we're continuously moving into this version of like student debt servitude, right? And it's worse in the United States where you can just rack up so much in debt, and that debt is the only debt you can't discharge in the US, right? With a personal bankruptcy. And again, all these different things have so many unintended consequences, right? Like think about the lack of freedom that individual that's carrying around 6 figures of school debt has, right? Like you can't go be an entrepreneur. You can't just go experiment or play the same way if you know you've got that
property.
It limits everything.
I will say this though, as you were saying that, I was also thinking about my experience. I think probably the best thing going for being in person at university, I actually was, when you're going into university, I was like 18, right? So at 18 years old, the lack of structure probably could have been very detrimental, and like who knows where I'd be now, because I did develop some critical thinking throughout that period of time. It wasn't necessarily the actual concepts, at least for me, but just the idea of for 4 years learning certain subjects and being accountable to myself, team members as well, and just continuously building on my critical thinking and looking at situations from I'm saying critical a lot, but a critical standpoint, and just that is definitely something that's also important. But yeah, just racking up 6 figures, that just scares me. That would be so scary.
To me, so much of it's completely unnecessary, right? I think so many professions could actually be taught through apprenticeships or mentorships where you actually earn money rather than lose money in order to do it. Like legit accounting. Programs. Yeah, I think accounting, I don't understand why it's not an apprenticeship oriented program. I think it would make so much more sense. Maybe if you wanted to make the kids feel good, they could go for a year or two of business school, but then slam them into a firm and actually have them spend time, because 95% of what I learned in business school wasn't particularly relevant to what I was putting into practice in the accounting field. And it certainly, it's just an extension of proving you can sit still and do as you're tasked, university, in my opinion, and just that you're able to do it with slightly less direct oversight, right? So you can mildly manage yourself independently. But outside of proving that, there's not a lot of us prove by going to university.
Yeah, the thing of like the standard 3 or 4 year program, not every profession needs the same amount of time. So it is kind of actually weird and interesting how for a honors bachelor, for example, you need 120 credits, and it's on a credit system. So yeah, I think for certain professions, it could literally be like a 3-4 month program, and it's just a diploma, and there you go. And the idea that you have to get a degree is becoming more and more out of style and not necessary.
And the frustrating thing is, for a lot of professions, there's still then additional hoops. Okay, you went through the 4-year university. Well, now you have to go through 30 months of practical experience to become an accountant. And you've got to write all these tests and belong to this trade profession, right? Same with legal. Oh, you went through law school. Awesome. You still got to prove yourself through all these other hoops you got to jump. Same with medicine. Again, it's not like you immediately leave the schools now and you've got all the credentials you need. You actually still need to go collect more pieces of paper or more proofs of work, essentially, that you're capable of working or that you put in the work.
Yeah. I'm looking at some of the comments. What are your thoughts on investing in land? I've personally never invested in land. And just because right now I'm kind of, the way I see it is, how's the land paying for itself other than the money out of my pocket until I actually do a project on it. So do you own any land, Matt?
No, raw land. I think it's one of the biggest red herrings or, false temptations for real estate investors. It sounds cool. And so everyone likes the idea of it, right? Like, I'm going to buy this land for pennies and we'll build a mega skyscraper and I'll be rich as hell. One thing to understand is, just like any sort of business, there's niches within businesses. And so real estate's a business. And so there's different niches in it. But I would view land raw development deals as being almost a separate entity from real estate investing the way I talk about on my YouTube channel or the way you talk about it on
totally
your YouTube
different.
channel.
That's the thing. There's no income.
It takes different levels of experience and connections. So I spent a brief stint after I quit my day job working for a land developer here in the city, and he had 200 of the most desirable acres in the city. And he owned it free and clear. He was financially well off already to begin with. And, he'd received like a $20 million offer just for the land, right? From like a Saudi prince or whatever. I was like, dude, take the money. I like ran the scenarios and broke it down for him. And it was so much smarter to actually take the guaranteed 20 rather than go through this long drawn out process with all the different variables and the potential of risk, because he can then go redeploy that 20. But the thing is, when did he buy this land? Oh, he bought it back in the 1980s, thinking it would be less than a decade till he could turn around. Then after 40 years of pissing around with the city, finally getting them to annex part of it and like into the city proper, then he was able to build upon it. And so thankfully he built up a large real estate empire that could see him through that drought of not having that deal come together. But there are massive consequences. And I see so many underfunded, undercapitalized, unexperienced investors buying raw land in the hopes that they're just going to get rich, but they're just counting on the greater fool theory because they've got no competitive advantage to that land.
Yeah, I've also had couple conversations over the past year with people asking me about land, and not even from the standpoint of, hey, I'm going to buy land and then do a development or a project myself. Literally just let me buy a bit on the outskirts and then hope that it gets bought by the city or some developer at some point. But the way I would see this is, like you just said, before you even saying it, I was like, guaranteed this guy bought it like 20 years ago. And yeah, it was in the 1980s, right? Also, think of the opportunity cost of 40 years of compounding and other investments. And you could literally have a tens of millions of dollars worth of portfolio just with starting with maybe 50 grand to buy the land. Like literally, that is the difference. So it's a tough one.
Well, I see we're coming up on the 1 hour mark. So really appreciate you guys jumping in, watching the live stream. Those of you that smashed the like button, particularly appreciate that. Really appreciate those of you jumping in the comments as well. And let us know, do you guys want this to become a reoccurring series? Should we do a whole spin-off channel? Should we just have some sort of way that we can get questions from you guys all the time? Give us your feedback. Give us your suggestions. If you got any cool name ideas, we're open to that as well. Because right now, I think Griffin and I are just exploring this as an experiment. So you guys literally decide whether this grows into something or not. And we'd love to get more encouragement. So let us know. Sharing is caring when it comes to social media. So please share this on whatever platform you're currently watching it on. And before we drop off here, Griffin, any exciting videos on the horizon you want to tell people about?
You know what? I'm going to keep those secret for now. Actually, I do have some videos in the works though, but stay tuned for those, and definitely let us know if you want to see this as a more recurring weekly show. It's something, if you have questions, we're happy to answer them, and this is a fun format. So yeah, how about you, Matt? You got some interesting videos? I'll throw that onto you.
I don't even schedule my own video, so I have no idea what's coming out this week, but they're all going to be huge.
The luxury, man.
Yeah.
You're too big.
But we'll be going live tomorrow. I'll be talking more real estate stuff, and who knows, probably Doug Ford will make an announcement on Friday and I'll get mad at him online. You guys seem to enjoy that. So keep your eyes peeled for any government announcements. But appreciate you jumping on this live stream, Griffin, and encourage everyone to jump over to Griffin's channel. We'll have a link in the video description down below. And maybe we'll see you guys all next week if you guys support this.
Yeah, thanks again for everyone who dropped in. And Blockchain Mac, thank you for the super comment.
All right,
have a great day,
guys.
everyone. Peace.